Hi guys, catching up here with Elizabeth Popovsky, Director of K Partners in her beautiful office in St. Kilda, who will be speaking in our upcoming event on the 23rd of November, which is a tax and financial structure for your successful subdivision. So Elizabeth, given the pressure on populations, the trend that we're seeing in our area, people are building a townhouse or a unit at the back of their current residence, or they're demolishing the whole thing and they're building a couple of units or townhouses. What people can expect to hear from you on the 23rd of November in our upcoming event?
As you highlighted, due to the increased prices in properties, as well as current residential owners trying to utilise the value that they've created in their properties, on the 23rd what we'll go through is look at the different scenarios and options, and to see what are the tax consequences of actually undertaking something that you mentioned earlier. And it actually does have impact on both whether you are going to pay income tax on an activity like that, or whether you are paying capital gains tax on that. On top of that, we'll look at also whether you are subject to GST, which, as you know, it's something that was introduced back in 2000, and most new sales will attract a GST of 10%. If you're looking at a project that creates $500,000 in value, you could be out of pocket for $50,000 without even knowing it.
And based on what you experienced, what are the common pitfalls people undertake before they even speak to a professional accountant?
So basically the common thing is, I have built a property at the back of my house and I have sold that property, and 2 years later you tell the accountant that you've done so. In the meanwhile, you've got the State Revenue Office chasing you, as well as the tax office, asking for tax and asking for GST on that project. And you are thinking that you're not doing anything wrong. You've built something, you might have moved in and lived in it for a year, sold it. It's not as simple as that. So we've got to look at how you can avoid paying tax, as well as what it means if you're undertaking a project with the name to make money.
Yes, so there's a lot to consider, isn't it?
There is a lot to consider. We will be looking at specific scenarios where if you are an owner of a property that you subdivide and you sell the block, just the block, you'll be looking at a property option where you demolish and you build two or more. You'll be looking at a property where you dispose of these developments that you build, and also if you are developing and keeping both properties for yourself, we'll look at that and we'll consider what are the tax consequences from that.
So the structure that you set from the beginning, will it have an impact on your borrowing capacity as well when you're applying for construction loan?
A simple answer to that question is yes. So we'll be looking at considering what are the best options if you are developing, or if you are building a second property at the back. Are you registering yourself and therefore considering a construction loan versus a development or business loan? So these are the options that we'll go through, and AJ from K Partners will address the finance side of things. But you will definitely walk out knowing which way you need to go and what income you potentially need to have in order to undertake either a subdivision or a build.
Oh wow, I feel like I learned a lot just from that 2-minute session with you, Elizabeth. So we look forward to hearing more on the 23rd of November, and really thank you for your time and your knowledge.
Thank you for the opportunity.
So guys, we hope we'll see you there. If you have not registered yourself, go to our Facebook page, so facebook.com/winrealestate.com.au. Go to our event section and register yourself, or you can send us an email to reception@winrealestate.com.au with your name and details, and we look forward to seeing you then.